What is the main purpose of the Insurance Contracts Act 1984? A. To standardize premium rates for all insurers. B. To allow insurance companies to offer international policies. C. To ensure fair and balanced insurance contract terms for both parties. D. To regulate the Australian financial markets directly. The correct answer is C. To ensure fair and balanced insurance contract terms for both parties. Explanation. The Insurance Contracts Act 1984 was introduced to regulate insurance contracts and ensure fairness and transparency for both insurers and insured parties, improving public confidence and legal certainty in insurance dealings. Who is responsible for issuing Australian financial services licenses (AFSLs)? A. Reserve Bank of Australia, or B. Australian Prudential Regulation Authority (IPRA). C. Australian Competition and Consumer Commission (ACT). D. Australian Securities and Investments Commission (ASIC). The correct answer is D. Australian Securities and Investments Commission (ASIC). Explanation. ASIC issues AFSLs and regulates the conduct of licence holders to ensure consumer protection and financial system integrity. Which of the following is a primary legal obligation under the Insurance Contracts Act 1984? A. Provide a cooling-off period of 60 days. B. Disclose the insurance policy to a public register. C. Act with utmost good faith. D. Underwrite all high-risk policies equally. The correct answer is C. Act with utmost good faith. Explanation. Both the insurer and the insured must act honestly and disclose all relevant information. This duty applies from policy application through claims. Which of the following would be classified as commercial insurance? A. Motor vehicle comprehensive insurance. B. Income protection insurance. C. Business interruption insurance. D. Travel insurance. The correct answer is C. Business interruption insurance. Explanation. Business interruption insurance compensates for income loss due to events like fire or natural disasters and is typically used by commercial clients. What is the purpose of a statement of advice? So A. It lists all underwriters involved in policy creation. B. It outlines the advisor's personal recommendations to client. C. It defines the types of insurance policies available in the market. D. It calculates how much commission is earned on policy. The correct answer is B. It outlines the advisor's personal recommendations to client. Explanation. And so is required when personal advice is given. It details the basis for advice and helps ensure clients make informed decisions, which term refers to the portion of a claim the insured agrees to pay before the insurer covers the rest. A. Premium. B. Benefit period. C. Deductible. D. Indemnity. The correct answer is C. Deductible. Explanation. Also known as the excess, the deductible is the amount the policyholder must pay before insurance benefits begin. Under RG, what type of insurance advice requires Tier 1 competency? A. Providing factual information only. B. Giving advice on retail life insurance products. C. Selling motor insurance without recommendations. D. General advice on cancellation terms. The correct answer is B. Giving advice on retail life insurance products. Explanation. Tier 1 covers complex products and personal advice, including life and general insurance that require high-level competency standards under RD. Which of the following is not a key player in the general insurance market? A. Insurance broker. B. Underwriter. C. Financial planner. D. Insurer. The correct answer is C. Financial planner. Explanation. Financial planners may refer clients to insurance products but are not core players in the general insurance structure, unlike brokers, underwriters, and insurers. Which document must be given to clients before general advice is provided? A. Certificate of currency. B. Statement of advice. So C. Product disclosure statement (PDS). D. Financial services guide (FAG). The correct answer is D. Financial Services Guide (FSG). Explanation. The FSG explains the advisor's services, remuneration, and complaint processes. It must be provided before financial advice is given. The duty of disclosure applies most directly at which stage of the insurance process? A. When the insurer issues a policy renewal notice. B. When the claim is being assessed by the loss adjuster. C. When the client applies for insurance coverage. D. When the advisor calculates the deductible. The correct answer is C. When the client applies for insurance coverage. Explanation. At the application stage, the client must disclose any relevant information that may affect the insurer's decision. Failure to do so may lead to denied claims. What is a deductible in an insurance policy? A. The full amount the insurer pays on a claim. B. The portion of the loss the insured agrees to pay before insurance coverage begins. C. The commission paid to an insurance advisor. D. The total sum insured under a policy. The correct answer is B. The portion of the loss the insured agrees to pay before insurance coverage begins. Explanation. A deductible, also known as an excess, is the initial amount of any claim that the policyholder must cover before the insurer pays the balance. It helps reduce minor claims and keeps premiums lower. Refer risk transfer through insurance. GE3000115. Which of the following is considered a business risk rather than a personal risk? A. A homeowner's contents damaged in storm. B. An individual's injury during recreational sports. C. Company losing income due to equipment failure. D. Theft of bicycle from garage. The correct answer is C. A company losing income due to equipment failure. Explanation. Business risks affect the operations and profitability of a company, such as equipment breakdown, loss of revenue, or legal liability. The other examples are related to personal or household risks. What is the first action a client should take after suffering an insurable loss? A. Repair the damage before reporting. B. Lodge a formal complaint with AFCA. C. Notify the insurer or insurance advisor as soon as possible. D. Hire a lawyer for representation. The correct answer is C. Notify the insurer or insurance advisor as soon as possible. Explanation. Clients must promptly inform their insurer or advisor about a loss so the claims process can begin. Delay in reporting may lead to complications or denial of the claim. Which of the following actions best demonstrates ethical conduct by an advisor? A. Recommending a product with the highest commission. B. Only providing advice to clients who agree to buy a product. C. Ensuring advice is suitable and in the best interest of the client. D. Withholding important policy details until the client signs. The correct answer is C. Ensuring advice is suitable and in the best interest of the client. Explanation. Ethical conduct involves acting honestly, fairly, and in the client's best interest. Recommendations should be tailored to the client's needs, not based on personal benefit. Which of the following is a valid reason to escalate a claim to a dispute resolution body like AFCA? A. The client forgets to pay their premium. B. The insurer denies a claim and the client believes the denial is unfair. C. The client is unsatisfied with their chosen policy. D. The claim is still being processed within standard timeframes. The correct answer is B. The insurer denies a claim and the client believes the denial is unfair. Explanation. If a client disputes an insurer's decision on claim, they have the right to escalate the issue to AFCA, which provides free and independent complaints process. What is the purpose of recording detailed file notes during client interactions? A. To reduce paperwork for the advisor. B. To provide evidence of advice and maintain compliance. C. To compare notes with other advisors. D. To avoid using official documentation. The correct answer is B. To provide evidence of advice and maintain compliance. Explanation. Accurate file notes are essential for compliance and risk management. They serve as a record of advice given and protect both the advisor and the client in the event of a dispute or audit. Which of the following best describes underwriting in general insurance? A. Promoting insurance products to clients. B. The process of assessing risk and determining policy terms and premiums. C. Managing client complaints after a claim. D. Handling post-sale documentation for a policy. The correct answer is B. The process of assessing risk and determining policy terms and premiums. Explanation. Underwriting is the process where insurers assess the level of risk a client presents and determine suitable policy terms, premiums, or whether to offer cover at all. What is a key ethical responsibility when collecting client data? A. Selling it to third parties for marketing. B. Sharing it with colleagues without consent. C. Storing and using it only for the intended insurance purposes. D. Making it accessible to anyone in the office. The correct answer is C. Storing and using it only for the intended insurance purposes. Explanation. Under the Privacy Act 1988, advisors must collect, store, and use personal data only for its intended purposes, e.g., providing insurance advice and ensure confidentiality. Which of the following is typically issued to confirm that insurance cover has commenced? A. Product Disclosure Statement (PDS). B. Insurance Quote Summary. C. Confirmation of Cover or Policy Schedule. D. Financial Services Guide (FAG). The correct answer is C. Confirmation of Cover or Policy Schedule Explanation. Once cover is arranged and premiums are paid, the insurer issues a confirmation of cover or policy schedule detailing the terms and scope of the insurance. Which of the following is a conflict of interest that must be managed? A. Recommending a policy solely to meet the client's needs. B. Referring client to another specialist where appropriate. C. Recommending product based on higher commissions rather than suitability. D. Refusing to advise on product outside your license. The correct answer is C. Recommending a product based on higher commissions rather than suitability. Explanation. Advisors must avoid placing personal benefit over client interests. Recommending products for higher commissions rather than suitability constitutes conflict of interest and must be disclosed and managed. What is the main purpose of a deductible in an insurance policy? A. A government-mandated fee charged for all claims. B. The portion of the loss the insured agrees to pay before insurance coverage begins. C. A penalty charged by the insurer for late payments. D. The amount the insurer must pay before any coverage applies. The correct answer is B. The portion of the loss the insured agrees to pay before insurance coverage begins. Explanation. A deductible is a cost-sharing mechanism where the insured agrees to bear a portion of any claim. This reduces small claims and helps keep premiums affordable. It also encourages clients to manage risks responsibly. Deductibles vary based on policy terms and directly affect the pricing and frequency of claims. Which of the following is typically the first step in the insurance claims process? A. Policy renewal by the insurer. B. Lodgement of the claim by the client or advisor. C. Payment of the claim by the insurer. D. Referral to FCA for dispute resolution. The correct answer is B. Lodgement of the claim by the client or advisor. Explanation. The claims process begins with the insured or their advisor notifying the insurer about an incident. This step, known as lodgement, includes submitting documentation such as claim forms, incident reports, or police records. Without this step, the insurer cannot initiate investigation or assessment. Which situation best represents a business risk? A. An individual losing their wallet. B. A loss of income due to an illness. C. Theft of a personal vehicle from the insured's driveway. D. Damage to equipment used in company's operations. The correct answer is D. Damage to equipment used in a company's operations. Explanation. Business risk refers to threats that may impact companies' operations or assets. Damage to business equipment can halt productivity, affect revenue, or lead to liability. In contrast, personal risks involve individual assets, health, or income disruptions unrelated to business operations. What is the advisor's ethical obligation when dealing with client? A. Recommending products with the highest commission. B. Avoiding disclosure of potential conflicts of interest. C. Acting with honesty, diligence, and in the best interest of the client. D. Acting in the insurer's best financial interest. The correct answer is C. Acting with honesty, diligence, and in the best interest of the client. Explanation. Advisors must act in accordance with professional standards and a duty of care toward the client. This includes being transparent, competent, and avoiding misconduct. Providing advice that aligns with the client's goals and circumstances is central to ethical practice under financial services laws. Which of the following would most likely constitute a conflict of interest? A. Encouraging clients to compare multiple providers. B. Disclosing commission arrangements at the outset. C. Recommending a product primarily because it offers a high commission to the advisor. D. Recommending a product that best suits the client's needs. The correct answer is C. Recommending a product primarily because it offers a high commission to the advisor. Explanation. A conflict of interest exists when an advisor's personal gain, e.g. high commission, compromises their ability to act in the client's best interest. Advisors must disclose such conflicts and either avoid or manage them transparently as outlined in the Corporations Act and the SIC guidelines. Which party is mainly responsible for providing accurate and complete information when lodging an insurance claim? A. The insurance advisor. B. The underwriter assessing the claim. C. The client who is making the claim. D. The ombudsman handling disputes. The correct answer is C. The client who is making the claim. Explanation. Under the principle of utmost good faith, the client must disclose all material facts honestly and promptly during a claim. False or incomplete information can lead to claim rejection or policy cancellation. Advisors assist in gathering information, but responsibility lies with the claimant. How does the insurer determine an appropriate premium for a policy? A. By analyzing the risk profile of the insured, including likelihood and potential impact. B. Based on a flat fee determined by the government. C. By checking how many claims the insurer paid out last year. D. By asking the client what premium they can afford. The correct answer is A. By analyzing the risk profile of the insured, including likelihood and potential impact. Explanation. Premiums are priced through the underwriting process, which assesses the risk of insuring an individual or business. Risk factors include location, occupation, claim history, and the potential size of a loss. A higher risk usually means higher premiums and vice versa. Which of the following demonstrates appropriate management of client privacy under the Privacy Act? A. Printing client data and storing it in an unlocked cabinet. B. Sharing claim updates with a client's family without permission. C. Using secure password protect DRM system to store client information. D. Sending sensitive documents via unencrypted personal email. The correct answer is C. Using a secure password protect DRM system to store client information. Explanation. The Privacy Act 1988 requires advisors and licensees to take reasonable steps to protect client data. Using a secure CRM system with encryption and access control safeguards client confidentiality, reduces data breach risk, and ensures legal compliance. Which of the following actions best supports ongoing client engagement? A. Reviewing the client's policy only upon renewal. B. Contacting the client only after claim is made. C. Avoiding communication to reduce compliance risk. D. Providing regular check-ins and reviews based on changing needs. The correct answer is D. Providing regular check-ins and reviews based on changing needs. Explanation. Effective client engagement involves regular reviews, updates on policy changes, and proactive service. This ensures the client's cover remains suitable and builds long-term trust. Ongoing service is part of professional conduct and helps prevent disputes or underinsurance. What is a key requirement of compliant record keeping? A. Retaining only verbal records of advice provided. B. Storing client information on personal devices. C. Documenting interactions clearly, securely, and in line with AFSL requirements. D. Avoiding notes to prevent liability. The correct answer is C. Documenting interactions clearly, securely, and in line with AFSL requirements. Explanation. Compliant record keeping includes accurate, timely, and secure documentation of all client interactions, advice, quotes, and communications. This supports audit trails, dispute resolution, and regulatory obligations under a 6 GE30001 and the licensee's AFSL conditions.